freetradingvideos.com. You're here with Breakout. That D7's already taken us through the S&P, the Dow, the NASDAQ. I want to take you a little bit further and a little bit more in depth here into a couple other markets. First, we're going to look at the New York Stock Exchange. So we looked at this just last week, and we saw we had the symmetrical triangle. Now we had the downward market coming into that symmetrical triangle, which gives us a much greater probability to break down, and today we did. Now you can see the trend line coming through here. This is coming off the weekly chart. So we do have some major support down here, which would be the low of July 15th. So that's something to look for. But a lot of people saying this is the wave 3 down. This should be the big one down. Just be very careful on trading to that. Don't bet the house on this. We could find a bottom right here and boost back to the upside. Be very open-minded as a trader. So we have the symmetrical triangle. We broke out of that symmetrical triangle. You can see we couldn't get back above the 13 and the 20-day moving average right here. And if we look at the weekly chart on this, what you'll see is big leg down, and look at this. It's basically a low base. You see we've got the sideways consolidation. So if we can break below this area right through here, okay, we can have a big move to the downside on the New York Stock Exchange. Next one I want to take you into is bank. That's right, breakout's taking you back to the bank. So on the daily chart of the bank, this area is a major support area, 2310. This is where we came right down to today, touched and went straight back up. Now the market was just closing as it did that. So this is the area that if the Fed want to protect this market, this is where they're going to do it. So we can see this is coming right at the low here. We had a resistance area right here, resistance area here. We found support there just on Wednesday and Thursday last week right here. Okay, it's still above the 13 and just above the 20 here. So rising wedge come up, we're broken out, it tested what was once support, now resistance, and breaking down. Now if we break below the low here, we have a complete top in place. That'll give this permission to really drop. Another chart here, the VIX. Check the VIX out here. You can see the VIX. Okay, falling wedge coming through here. So break above that upper trend line, break above that 20-day moving average. We know we've got fear coming into the market, so we still need to see some indication of selling. We do have the New York Stock Exchange, and like I said last week, that's an indication of institution selling. So we have that. So we have a start. We need to see the VIX break out of this wedge here, out of this channel here. That'll give us some movement. Now what we really need to see is money flow change. One thing we need to see is money move out of financials into oil, gold, and commodities. And that's what's been happening lately. Could that change at this point in the game? It absolutely could. But gold and commodities and oil have been the safe haven. So if we just take a look at the Dow 30 here, we can see this is sort of by a percent change on the day. Look at the leaders here to the downside. GM, AIG, Citibank, Bank of America, JP Morgan, American Express. Is that telling us something? Yeah, for sure. We've got money flow coming out of these stocks right now, and that's what we need to see. Now we need to see this really happen over the next couple days. So if we can see this take place and follow through, we know we've got the bear in the bag. Okay, a couple other things to look out for. What about the gold ETF, GLD? We need to see money come into there. Okay, what about USO? Okay, oil ETF. We need to see money flow come into oil. Now it doesn't have to come into oil. Oil is a political, been a manipulated market, so it may not come into oil. Now if oil does not rise here, that's actually beneficial to the bear. In the respect to the S&P and the Dow are made up of major components of oil stocks. So if the oil does not rise here, it doesn't help or hurt the market to the downside. Now if oil does rise, that really hurts the market. So that'll be a benefit to the bear. Well, that's it for me. I'll probably see you guys later in the week. I'm batting down the hatches here as Tropical Storm Faye knocks on my door in the early hours of tomorrow morning. So I may not have power, I may not have internet, and I'm done for trading for the next couple of days. Thanks for attending freetradingvideos.com. This is Breakout. To all those guys in Florida, take care, be safe.